Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as stockcharts.com. So today I want to talk about the industrial sector, and I know some people would just say, well, that's kind of boring, but actually there's a lot of good stuff going on there. So that's why I want to share it with you today. So stay tuned. We got lots of good stuff. Markets are rallying off the low. That continues. We'll have the Fed meeting and get the results of that and see how the market responds to that. Why the X's need some attention, and I'll cover that off, and then we'll get into the industrials leading the rally last week and why that might be set to continue. So with that, if you like what we present here, you can also find a lot more of it at ospreystrategic.org. We have a 1-month membership available for $7 just to try it out. You get a look at everything we've ever done. Feel free to try that. And what do you get over there? Well, we have award-winning technical analysis, a weekly newsletter, weekly video, monthly conference call that was just recorded on November the 1st. We've got trade setups on the Canadian side and the U.S. side of the border. And we've got 2 CMTs working together, Dwight and myself. So anyway, if any of that interests you, feel free to head over there and check it all out. So what I'd like to start with is, first of all, this is set up for 6 days ending October 27th. What you see here is the industrials was the best gainer versus the S&P. And if we just click that off, then the industrials were up 7% last week and did really, really well. Now, I will say that the right-hand side of this did a lot better than the left-hand side. So the growth areas like discretionary communication services and technology were some of the weakest. Whereas look at financials up here with industrials, they were both very strong in their leadership. And if we move this forward to just, let's say, the last 2 or 3 days, there we go, there's 4 days. What you can see is that there's a bit more of a rise over here. Industrials are still holding up okay, but the point I want to make is that as we increase or as we move forward, what we want to watch for is which sectors are leading. And right now, unfortunately, defensives are really holding up well, which kind of makes the rally a little bit suspect. But industrials were still one of the strongest over the last 4 days, so that doesn't make us want to get out of them, that's for sure. Looking across at the S&P 500, I think what's really notable here is we've been kind of in the same trading area, just this 1% trading area for the last 2-3 trading days, maybe even 4 or 5. But we've got a PPO right around 0, so we don't want to see it turn down right here. So hopefully we can keep this rally going. And obviously the Fed meeting is going to add some volatility to that picture. Now, one of the things that should happen is if industrials are improving and the transports are improving, and they're not yet, but if they were to start kicking it up, what we should also see is commodities start to improve. So what I want to talk about now is the X's that I had mentioned in the opening presentation there. Just on this slide here, why the X's need some attention. And what do I mean by the X's? So what we've got is they're typically commodity related ETFs, and each one of them have something different. So here's XOP, and what you see is the oil production ETF, and it's actually up pretty close to the top right hand side of its chart. And the real question is, can it break out here or does it fail? So it's been, much like the S&P 500, just kind of wobbling a little bit higher over the last week. Nothing wrong with that, but it's just wobbling there trying to get going. When we look at the copper miners ETF, it's definitely, down in the bottom right-hand corner. But one of the things that's interesting is this 100-period moving average has been kind of a limiter on it, and we want to watch and see if it can break out. I have this green area on my chart, and that green area is just a Keltner band set really fine. And what it does is it's basically saying if we can, if we stay on one side of this like we did all through here, that's kind of just telling us to avoid it. You might get kind of 2 or 3 days where it's trying to move. But the bottom line is we want to watch and see if it can finally sustain some pressure and live on the upside of that Keltner band. So far, it hasn't been able to do that, but we did close Tuesday above it, and we're right at that 100-period moving average. So can this be the breakout to the upside? That would be very, very positive. Now, when we go look at the steel companies, they're actually pushing up a little bit above this Keltner band, but it didn't work as well on this particular chart. You can see they spent quite a bit of time, but we are above the 100-period moving average. And what I want to watch for here is that all of these start to take off to the upside. If they can't get going, that tells us probably what we need to know, and that is that we've got a bit of a concern around the global manufacturing and industrial cycle if we don't need raw commodities. So these companies are pretty important for us to just be aware of. Now, lastly, we have the gold miners, and obviously they've been out of favor. I think I saw something from Brooke Thackeray that said the charts have been down 7 months in a row. And what does that mean? Well, if gold's been down 7 months in a row, it was like 1869 or something was the last time it was down 7 months in a row. Anyway, my point is these gold miners have been holding this same sort of Keltner channel and haven't really broken out. But again, they're trying to poke their head above this, and the PPO is right near zero. So if all of a sudden we were to start to see a change in trend, this is the kind of place we would expect it to show up. So I like them from that perspective. But again, what we need to do is go look and say, what's going on with the industrials and can they really get rallying? So again, let's just go back here. This is the exploration and production ETF. And it looks okay, but really it's been sideways since April. And if we unwind the chart a little bit more, it kind of in this March timeframe is when we entered this sideways zone from 110 to 150. I realize that's a wide range, but we've been living in that area and just kind of sloshing back and forth. Now, the S&P 500 is way down here in the right-hand corner, so let's not make it sound too bad. But what we want to make sure of is that this, kind of resistance area, call it 145, 150, doesn't end up just being kind of the final high and it rolls over. I'll give you an example on crude oil. So if I just go to whatever USO or any of these charts, and if you look closely in here, what we see is kind of the same sort of setup. I'll just put a vertical line here. So this is kind of where it feels like we're at with vertical line. With XOP is we had a spike, then we kind of went sideways for a little while, and we want to see if we can keep going. Now, what happened here, we broke out for almost a week, and then we rolled down, and you can see that was a pretty major breakdown. So we want to see a breakout of this pattern and move higher. Now, again, if I go back to the XOP pattern, you can see what I mean. We had a big push up. We've had 1, 2, 3, 4 tests trying to get going here. And then the real question is, can we get going? And if so, do we take out the prior high and hold it, or do we just kind of move up and then roll back down? And if we rolled back down, then I think it's much more that we're at this point in the cycle and we start to just kind of slide. So we don't want to see XOP get on the downside of this Keltner channel. Currently it's above it, but you can see crude oil is not moving above it. And so all of these things have this 100-period moving average kind of in the way, and they've been resistance along here. So looking for the broad picture of all of these kind of commodity-related trades to start to pop to the upside and give us some real ammunition for something bigger. So with that, I think, again, I want to see these commodity-related trades start to push higher. And the reason for that is because commodities are a very good economic demand indicator, and if they could turn up, that would be great. Now, there's some hope that China or whatever would change the thrust on the commodities. I fully agree, but if the whole world goes into recession, they're probably not going higher. So we want to make sure we watch. So then the next thing I wanted to talk about today, and I'm going to spend the last half of the show on this, is the industrial sector. And so when we talk about the industrial sector, there's a whole bunch of different types and parts of it. But what we can do is we can take all of the industrial stocks and put them in one chart list. So how do we do that? So we would go to and I'm just going to grab this. So we would go to your dashboard, and then on your dashboard go down, and we would say we want to write a new scan, and it defaults with this type of information. So to get this to say industrials, what we want to do is go down here, and you'll see these headers here, they're alphabetical. So we want to focus on the headers, but here's healthcare and then industrial. Now, industrial has a lot of different sectors. It's pretty deep. And so we want to get all of those into one chart list, or we could go in individually, but for now we're going to talk about it as a whole group. And so what we would do is we would add that, and when we look at what we've done, it puts the group as in the industrial sector, and then all of these other stocks. Well, I actually want it to be exactly the opposite. I only want it to look at the stocks that are in the industrial sector, and then I only want it to pick up stocks with, let's say, a volume of 400,000 a day, just to pick a number. So we're going to add a 0 to this, and we're going to flip this off. And then what we would do is we would check our syntax, make sure I haven't made any mistakes, and then hit run. And now what that's going to do, it's going to create a chart list. So it's got 256 stocks that trade with a volume of 400,000. And so that should work out great. And now I like to look at them with the scooter ranking, so the strongest first. And by doing that, what that allows me to do is focus on the winners. So then I could save it to a chart list, and in this case I'm just going to dump it into another chart list because I've already got one made. But you would go down here and just whatever, scanning honeybees or something, put it in there, and you'd say preserve the sort order. So that's fine. So we get it into a list, and now all of the stocks are listed there. I have this already set up, so I don't want to take too long just working through the general setup. But what happens here is I've created these charts now. I've put them into 3-year weekly chart. So here's the industrial list. This is that same list of stocks. And then what I want to focus on this list is that we have anything in there kind of comes out, and I've set it up so they all have the same period. And what you do is you set your period here, maybe anything else you want to change on them if it's different than your default, and hit apply style to all. And when you do that, I guess I could grab one of these, whatever. So here's Scorpio tankers. So this is my daily default. Chart looks pretty nice, beautiful, breaking out to new highs, just checking out the sunshine up there. It keeps going. But if you wanted to look at that in a weekly, let's just say here's my regular weekly, but that's 5 years of data, and I want 3 years of data. So how do I do that? I just change it and say update. And then I go down here to the bottom and say apply style to all. And now it's going to change all of the charts in there to look like this weekly chart. Now there's a few things on this chart that I particularly like. One is it tells me not only the sector, but the industry within the sector. So this is marine transportation. And you can see that the scooter ranking on this moved into positive territory roughly at the beginning of the year. This thing's been going up all year while the S&P 500 has been going down. So it's been very strong. And so when you see charts like this is kind of the benefit of putting all of the strong stuff first. And when we hit this view all button, now what's going to happen is I've ranked them by the scooter ranking. And here it tells me that this is a mid-cap size, so it's got some alpha. It can move pretty quick. This was a $10 stock or $12 stock around the middle of the year, and it's now a $50 stock. So in a year of everything going down, this thing's been bucking a headwind is a good way to put that. So here's another one, Shipping Corp. And if we look at the group of stocks here, what do we see in the top 25, right? Marine transportation, marine transportation, marine. There's a theme there. All the top performing areas of this sector are in the marine transportation. And we could, quickly flip like this, go back and forth and look at the different types of industry groups. So let's just start with A, and now we can scroll down, just working our way down. Sorry about the scrolling, but here's all the marine transportation. And what you can see is there's, a good 15 or so that have a scooter ranking above 75, and then there's kind of 10 that don't. So you probably want to avoid those, and you want to focus on the ones that are up in the top half of the deal. it's the ability to look and just kind of see the themes through the market that's going to help you. So as an example, if we were to start buying marine transportation stocks, we could take a look at this list and just see what's happening. What I like when we start to get into, looking at a list of stocks like this in general is it brings names forward that you otherwise wouldn't see. So here's KLX Energy Services, Oil Equipment Services. But when we hit View All, we can literally look through and just see what's going on across the group here. So here's TransDigm, United Technologies, Boeing, and in this group here, I haven't saved this sort order. So if we just go whatever chart per page summary listing, if you've already got numbers on the front of these and you want to get rid of them, the way we do that is we go to Edit, and then we're going to select all, and we're going to say Remove Numbers. You're going to show me that little box. So it's going to get rid of these numbers at the front of everything, so we're going to remove them. And then we're going to go back to summary, and the reason we have to go to summary is because that's where we can find the different columns that we might want to sort on. So we could sort on market cap as an example, but we want to sort on the scooter ranking, so we're going to click on that. And now it's going to put the top stocks first. And then when it does that, what we can do is we can take that list and add numbers to it. So how do we add the numbers to the front to hold this sort order? And again, if we sorted it by industry, what happens now, so I sorted it by scooter, then industry. So what happens is it puts the top of each different industry by scooter ranking. So scooter ranking highest to lowest in aerospace, and then we go down highest to lowest in airlines, highest to lowest in it's interesting. We picked up asset managers and biotechnology. That's a pretty interesting result. And then here's our building materials. Anyway, as you can see, there's lots of different ways to sort it. But if we just liked this, where we grouped it not only just by scooter ranking, but by industry group, we could save it like this, or we could just go look at the top stocks. Anyway, let's try this just for the heck of it. So number in sorted order, and now it's going to add that number to the front of all of these columns, and we want to scroll down to materials, to marine. So we just type in marine up here in the box, and now it brings it up. So once we go there, we can start looking through this marine transportation and just see if there's any themes there, or perhaps they're just starting to break out. And a lot of times I find the breakouts happen around 25 and 75. So anyway, in this particular case, these stocks are all up in the top right-hand corner. And when you just think about all those technology stocks down in the bottom right, this has been fighting a trend for a while. All of these marine names up at the top corner here. So they look pretty strong. And is there any reason not to like them? I don't think so. As long as oil continues to go higher and natural gas, these things are going to be pretty happy. So here's GasLog Partners, and it's just trying to break through this, I'll call it $6-7 range, and pushing up. It's a nice chart. The problem is over here on the left-hand side, it kind of really got beaten down. So if we just got rid of that, if we went to 2 years just to change the chart display, now all of a sudden it looks like much more of an uptrend. But what you'll see here, this was 470 in the middle of September, and now it's 810. That's a move most of us would like to live with in a bad market. So as we go forward, and I'm just going to flip back so I'm looking at all of the stocks in order here. Here's the DHT Holdings. This one broke out in July, ran up, pulled back, and is now just trying to make new highs again. There's no reason not to like them unless they stop doing that. Now, the other part of this exercise, this TK Tankers, you could see a real horizontal resistance at $3, $3.55. Here was $3.90. It's just breaking out today to fresh new highs. What's not to like on this chart? And if it just keeps going with the rest of the group, then that's pretty powerful. Now, the fact that it hadn't run before is a little bit of a problem, but it's starting to break out now, and that's kind of when you're interested, is just as the move starts. So when you go look at a chart, typically, let's just take a different one here. When a chart starts to break out of a base or break down from a base, so here you are, you're going sideways, and all of a sudden this thing starts to drop. It was a pretty meaningful pullback. Let's call it $15 down to 5 within 3 or 4 months. And now it's just building a base and starting to work its way higher. That's a pretty tempting place to get on board, and there's a good reason to look at these names as they start to do that. So here's Nordic American Tankers. This one's trying to push up. Again, all of these charts are just setting up for breakouts now, so there's nothing wrong with that. Probably covered this off enough. This Flex LNG has been look how smooth that run has been for years. And the full stochastic, with the exception of January 2022, almost all the time the full stochastic keeps bouncing around this 50 level, telling us that there's, it's a really strong stock. So what's not to like? Quite frankly, that they all look good. Now, if we went back and we jumped into the list here and we wanted to start looking, whatever, let's say trucking or something like that. So if we wanted to look at trucking, let's go back to summary view. So we're going to change view all, and we're going to flip over into summary. I'm going to search the table for trucking and just jump in here, and there's some names put forward, right? And then all of a sudden we can just go start to work our way through them. Now we've sorted within transportation, so this should stay on trucking as we click our way through the charts here. Anyway, you get the idea, but you can go through by each industry group and try to find the strong performers in each one. Some of them are literally just starting to break out, like we saw in the maritime shippers. Some of them have been running for a long time. You really get to pick your choice as to the way you want to trade it. Now, here's Landstar, big downtrend, breaking above the 40-week moving average for the first time since the beginning of the year. That's probably a trend change we want to keep track of. And the scooter ranking never really got ugly, but I would just say, I'd like it to be a top performer, not just an average performer, and it really hasn't gone that far in the last 2 years. I like the price action on the chart. I'm more inclined to try and find something that was terrible that likes to pick up. So as an example, we could go down here, let's just pick C.H. Robinson or something, and our scooter ranking is now 39. Well, maybe we'll get more of a thrust this way. It all depends on your trading style. Do you like to play beaten down names trying to turn up, or do you like to play names that are breaking out to new high and nobody wants to sell because the stock continues to go to new highs? Most people would prefer the second version, playing a breakout to new highs and it taking off. And once you kind of get above that resistance layer, that's pretty solid. In here, you can see stock went sideways, and then all of a sudden it went from $98 to $110. That's a nice $12 move. And I have a friend who plays C.H. Robinson all the time, and that's all he tries to do. He tries to buy it near this low and trade it to the high and then just sell out of it again. He plays that $10, $20, $30 range all the time. There's more than one way to make money in the market. What I wanted to show you today was that I think the industrial metals really need to pick up here to start convincing me that the industrials are getting going. But we're seeing marine transportation obviously doing well. We're starting to see some of these trucking stocks change. We could go through all of the different types of stocks, but the goal of the presentation today was to show you how you could go and set up the chart list so that you can find what you like. And again, if you want to go in by industry and maybe it's defense industry or something like that, just look at the scooter ranking, and at least that's going to tell you if you're looking at a stock near the bottom of the range or some of the better performing names so far. And again, what is the scooter ranking? It's much like a sports ranking for stocks. Who's performing better lately? And you have to use some metrics to try to figure that out. We don't have a win-loss column, but we can talk about the percentage move over a period of time, how far above it, the 200-day moving average it is, etc. So there's 6 components to the formula for the SCTR ranking. Anyway, as they start to break out, you can start to look for better price action. I would encourage you to look right in on stocks around 25% on the scooter ranking or 75%. 75% means their price action is breaking into the top quartile, the top 25% stocks, and can be really, really good. Or they're in the bottom and they're starting to turn up. And if you could start to see some of those start to, make a move from ugly to pretty, it all depends on your trading style. Hopefully that's helped you out. Keep looking at those X's. I want to make sure that they start to flip forward. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time, and you can also see the recordings on Stockcharts TV YouTube page. Thanks again, everybody. Have a good week. Bye-bye.
Hey guys, Dave Keller here with Stockcharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.